There's no rhyme or reason that I can figure out to, who gets audited and when.
Ben Wilkerson helps hundreds of low-income families impacted by IRS audits. He says going after low-income earners are easy targets for an audit. It's less work for the IRS and gets done faster, while wealthier filers have the resources to fight the agency.
And look, on January 1st, 2026, just a few weeks ago, the IRS flipped a switch that most people completely missed. They finalized the 1099K threshold at $20,000 and deployed a brand new form called the 1099-DA to track crypto and digital asset sales. And here's what happens next. On January 26th, less than 10 days from now, the IRS opens tax filing season. By February 15th, every platform you use in 2025 starts sending your income data to the IRS. DoorDash, Etsy, PayPal, Coinbase, all of it. By March 20th, their matching algorithm cross-references your tax return against 2 million other filings. If your return says 0 and their database says 18,000, you're flagged, not for human review, for an automated CP 2000 audit letter that's already queued up in the printer. You've got 92 days to file correctly. After April 15th, you're not preventing problems. You're responding to them with penalties, interest, and wage garnishments. So if you've got a side hustle, a freelance gig, a rental property, or you touched crypto even once in 2025, I'm going to ruin your day right now so the IRS doesn't ruin your year. Because what they just did is create a blind spot gap. And I'm about to show you exactly how it works and how to close it before they come knocking. And I know, the Pentagon just failed its 8th audit in a row. They can't account for trillions of dollars. But if you sell a used bike on eBay for $800, they want receipts. You aren't crazy for feeling like the system is rigged. No, because it is. On January 1st, the IRS finalized 3 major rule changes designed to tighten the net around side hustle income. So here is the strategy or strategies they are using against you. Change number 1. The 1099 NEC threshold remains at $600. Despite the rumors, it did not go up. If you did freelance work over $600, the paperwork is flying. Change number 2, the 1099K threshold finally landed at $20,000 plus 200 transactions. Permanent. Done. Change number 3, they deployed Form 1099-DA. This tracks digital asset sales, crypto, NFTs, anything blockchain. And here's the setup. These aren't random changes. It is a coordinated strategy to create a blind spot gap. The IRS set the 1099K threshold high, $20,000, so you don't get a form in the mail for smaller side hustles. But they kept the surveillance. It's like removing the speed limit signs but keeping the speed cameras on. You speed because you don't see a sign. Flash, ticket. The data collection never stopped. You think you're safe because you didn't get that 1099. But the algorithm knows. Here's exactly how the blind spot gap catches you. Let's say you run a small Etsy shop and sold $18,000 last year. Under the rules, the threshold is $20,000. Etsy does not send you a 1099. You check your mailbox, nothing. You think, hey, I'm under the radar. You aren't. The payment processor, PayPal, Stripe, they still have the data, and they are sharing it with the IRS. They created a system where the IRS has the receipt, but you don't. It is entrapment disguised as tax reform, and you still legally owe taxes on it. The IRS rule says if you make $400 or more in self-employment income, you must report it. That rule never changed. So here is the nightmare scenario. You don't get a 1099. The IRS gets the data from PayPal. You report 0. In June 2026, you get a CP 2000 notice. Hey, we noticed PayPal processed $18,000, but you reported 0. Can you explain? That is the blind spot gap, the area between what the law says you owe and what forms you actually receive. It gets worse though. Thresholds apply per platform. So if you made $18,000 on Etsy and $12,000 on eBay, neither platform hits the $20,000 threshold. So no forms. But you made $30,000 total. If you report 0, the IRS computer sees 2 income streams, adds them up, and flags your return. You aren't flying under the radar. You are flying directly through a laser grid. And one clarifier on the garage sale panic. If you sell a used bike as a one-off, technically not taxable. Personal property sold at a loss doesn't count. But if you buy used items to resell as a side hustle, flipping bikes on Craigslist, for example, that is taxable income. The difference? It's intent. One-off garage sales? Fine. Serial reselling for profit? That is a business. Now for the infrastructure trap. Form 1099-DA. Platforms must send these by February 15th, but many brokers are scrambling. You might get a form that is incomplete or late. The nightmare for 2025 is that brokers only have to report gross proceeds, not cost basis. So here's a real-world example. My CPA told me about his client that traded crypto 12 times in 2025. Total transaction volume, $95,000. Actual profit, $340. The 1099-DA reported $95,000 in gross proceeds. Without filing Form 8949 to show cost basis, the IRS will bill him for tax on $95,000. He would owe $20,000 in taxes on $340 of profit. So they filed Form 8949. The bill goes from 20 grand down to 71 bucks. Platforms are already reporting errors on these forms, missing cost basis, duplicates. If you are meticulous, the form they send you might still be wrong. Form 8949, it's not optional. It is self-defense. And this is all automated. There's no conspiracy in a smoky room, just code. A platform reports income on February 15th. By March 20th, the matching system cross-references it against 2 million returns. If yours says 0, you are flagged. You might think the IRS doesn't care about my $1,500 side hustle. You aren't paranoid. You are observant. But tax pros see a massive wave of CP 2000 notices hitting May and June 2026. The IRS just hired 5,000 new agents specifically trained to match platform data. They go after low-hanging fruit because it's easy. They know a billionaire has a team of lawyers, and you've got a TurboTax login and insomnia. They know you will just pay the bill. It is predation dressed as policy. If you do nothing, you get the CP 2000 notice in June. You've got 30 days to respond. If you ignore it, the IRS assesses the tax. Penalties accrue. Interest compounds daily. Then they garnish your wages. Then they put a lien on your house. All because you didn't report 1,800 bucks. You aren't helpless. You're just uninformed. Think of yourself now, though, like Jason Bourne, waking up in that alley. You don't remember how you got there, but you are dangerous once you know the rules. So here are the 6 audit-proof moves to make today. Move number 1, the data grab. Do not wait for forms. Log into every platform, Etsy, PayPal, Venmo, Stripe, Coinbase, all of them. Download your full transaction history and annual earnings summary. If they have the data, the IRS has the data. Make a spreadsheet. This is your map. Move number 2, the gap audit. Identify every deposit that was business income. If the total is over 400 bucks, it goes on your Schedule C, especially if you didn't get a 1099. Reporting income the IRS didn't expect to see, it's the ultimate power move. It signals to the algorithm, this person is honest. Go bother someone else. Move number 3, the crypto shield. If you touched crypto once in 2025, calculate your cost basis. The 1099-DA might only show sales price. If the IRS only sees the sales price, they assume it's 100% profit. You must file Form 8949. Hey, IRS, I sold this for $51,000, but I bought it for $50. Do not leave that field blank. A blank field is a blank check to the Treasury. I had a client who neglected this. Got a CP 2000 for $18,000. It took 18 months to fix. The form costs 20 minutes. The neglect costs 18 months of your life. Move number 4, the expense shield. So since we are reporting all this income, aggressively claim every legal expense. Software, home office, mileage. New threshold mean more visible income. You need more offsets. Keep the digital receipts. If that CP 2000 letter comes, you reply in 24 hours with a PDF that shuts them down. Move number 5, the preemptive strike. Tax season opens January 26th. IRS gets 1099s by February 2nd. File your return before the IRS receives all the data. Get ahead of the matching system. If your return is filed and accurate before the data dump, there is no mismatch flag. If you wait until April, you are playing defense. Move number 6, the 2026 Fortress. Start tracking income every month right now. Put 25 to 30% aside. Treat every gig payment like the IRS is watching, because they are. The IRS, though, isn't the villain. They are the enforcer. The villain is the gap, the space between what you know and what you are expected to know. Treat your side hustle like a fortress, the fortress that it is. Document everything. File accurately. Don't give them a reason to come looking. You are the type of person who sees the tripwire before you step on it. So go pull your records. Build your spreadsheet. Be ready on January 26th. Secure the bag. Protect the bag. But mastering the IRS filing is useless if you leave the front door open for the institutions you actually pay to protect you. You see, while the IRS comes for your side income, the banks are quietly engineering a silence that leaves your home equity exposed. And that's why I pulled out this video here for you to watch next. I break down that institutional indifference and the 9 ways smart homeowners are quietly protecting their equity right now. I'll see you there.